Dear Forex traders, trust you guys benefit from our weekly Forex market analysis, Forex trading strategies, and Forex trading education. So in this particular content, guys, we shall be sharing with you Forex market analysis for the pound USD, guys. Okay, and for this pound USD, guys, by the time you're done with this video, we shall discuss the fundamental analysis of the pound USD, the technical analysis of it, and the sentimental analysis. So we'll be looking at how to trade the pound USD for the coming week, and the rest of the section will also share with you the news and impact that has just hit the market, so just so as to guide us to trade the market profitably. So if you like the idea, guys, don't forget to subscribe to the channel, like and comment your favorite trading pair as we trade forex in Millionaire Logistics. Okay, guys, so for the pound USD, because it's an analysis for a swing time perspective, guys, we'll be looking at what we have on the weekly chart time frame. Okay, now on the weekly chart time frame, guys, before we delve into the fundamentals, let's just look at the simple tools that we have here. We have here the moving average, and guys, if you've gone through our previous analysis and all about analysis, we actually make use of the moving average, and it's just the exponential moving average 20, which you can see clearly on the weekly chart. And don't forget, guys, that on the daily chart we still use this same moving average, but then we adjust it to the exponential moving average 100. If you guys want to know why, you should check the particular content on our forex trading strategy and education playlist, right? So you actually know why we use this particular moving average configuration. Okay, so guys, from the fundamentals, since guys, on Friday, right, being the 5th of August, guys, a major news impact hit the market. That means the NFP report. So from the NFP, guys, we made the extract and theory that the USD happens to be very strong. Guys, if you want to know why, we'll actually dive this, we'll actually dissect the reason why it was so. So NFP, guys, like you know, NFP connotes what? The non-farm payrolls from the US economy, guys. Okay, and the NFP has to do with job numbers, right, in the non-farm, which is mostly the private sector, aside farming jobs and all. Okay, so what the NFP tells us is the number of jobs that has been added to the US economy, as opposed to what economists, what analysts were expecting, right, and opposed to the previous job numbers. So for this particular month, I think about over 537,000 jobs more were added, as opposed to what the analysts were expecting to be, I think 200,000 jobs, or around that figure. And then what we previously had, guys, was about 390,000 jobs. Okay, so from the data pool, the summary is that the number of jobs that were expected, right, was actually exceeded by the current numbers. So that is just to say that the USD is actually stronger. And if the USD is strong, guys, pound USD actually becomes a favorable pair to trade, because definitely from the pound side, it was shown that I think on the pound side there was an interest rate hike, and when interest rates are hiked, that just to shows that there's this kind of struggle to actually boost the pound, the pound currency. But comparatively, guys, if we adjust that to the chart, we can see that pound USD is bearish right at the moment. Pound USD has been bearish. Technically, pound USD is bearish. So with the fundamentals of the USD being strong, from the US report on the NFP numbers, right, we expect the pound USD to continue that bearish trend. And from what you can see, guys, the previous week here shows what a shooting star candle formation actually forming here. And with this, guys, you can see that it actually meets with a swing perspective condition, being that the market is kind of on a high now, right, meeting a previous resistance level. So we can expect the market to continue to the downside to break this particular structure, right? Now that's on one perspective. But guys, when we delve to a lower time frame like the daily time frame and the 4-hour, we shall see more reasons, right, for us to go short on the pound USD. But before then, guys, let's hook on to the daily time frame. Okay, now the daily time frame, guys, remember we're still going to share some insights as to the moving average. Okay, so for this now, because I'm using my phone here, I'm just going to adjust it manually. All right, so we're going to adjust this to 100. All right, so here we are. This comparatively what we have. Okay, and now we also know that what the price here is still under the moving average. Is assumed that the price is in the downtrend. You can see fully from this point that price has actually traded below the moving average, right? And what we see here is what we found this corrective move to the upside, and then the price actually continued to the downside, breaking the structure. Okay, and then if you actually look to this side again, there's the same thing. Price traded, made a corrective move to the upside, and then broke this structure to the downside, as we see here. And here we're seeing that kind of similar move again, right? Price actually making a corrective move to the upside, and then what's happening? We see price actually trading coming to the downside, right? So what we want to expect is simply for price to what break this structure to the downside, right? Break this structure to the downside, and that's what it is on the pound USD. Okay, so from the COT perspective, guys, you should also expect that at this point for the coming week, definitely the institutional traders will be looking on what buying USD, because the United States dollars now is kind of strong and everybody wants to be buying the United States dollars. And if you look on the other side, you can see the stock prices kind of falling. So if that is true, guys, and the next week we shall also see some kind of reactions in that, in that pattern. But for now, we are interested here is to trade the pound USD and the euro USD, because technically speaking, they are the good, very much technical price that we want to see. So let's delve further to the 4-hour time frame to see what where to expect. So on the 4-hour, guys, we have to blindly ignore our moving average here. Okay, so what we see here, guys, on the 4-hour is price has actually come to test this level here, this previous resistance level in this point. Okay, now what we notice here is that price, yes, has been in a downtrend. From what we can see here, price made this move, right, came to this level of supply, actually reacted, came to the downside, right? And then what we see here is price actually, after this very huge decline, fall in price to this point, you can see price coming to this kind of area here and actually ranged a little bit and broke this structure to the downside, and somehow price has returned to that level. So we want to see some kind of move, some kind of reaction here, and from here we should be looking at expecting a sell opportunity, right, for the pound USD in the future, right, in the long run. So we should be seeing something like this, maybe a little price move on Monday to this point. If price makes this high, to actually fall deep into the zone, and then should be expecting a fall in price to actually take out the structure, to actually take out this low here, right? So this is actually a good risk to reward if you're to ask me. And on the daily time frame, guys, on the 1-hour time frame, okay, it's far away from there. Sorry, I'm using my phone here. But then, guys, another thing to note, remember, guys, we've actually been sharing this new strategy using the Fibonacci tool, a day trading strategy for day traders and scalpers, for which we ourselves actually trade right now to align with the higher time frame perspective. So on that note, that's why we have these period separators here. So if I delve further to the 15 minutes time frame, perhaps I could throw more light on what that could actually present. So for that, now, like we shared in our previous video about the Fibonacci trading strategy, which we're sharing with you guys, and we've actually been using for intraday scalping and day trading purposes. Okay, so this period separator, like we have highlighted, this period separator here just shows the daily price movement. So for these guys, we actually shared some insights, major insights about how we combine trading sessions, the Fibonacci tool, demand and supply, and price action with time, right? Time to actually enter trades in that precise manner. So guys, so you don't miss out on that, we would advise you see a previous video on how to trade the Fibonacci, how to trade with the Fibonacci tool and the trading session, right? There's a content about that will definitely share more insight, practical insight on how to get smart entries and optimal trade opportunities for intraday trading. Okay, now we want to share with you too what happened on Friday. Remember, guys, Friday was the NFP release. NFP is actually released on the first Fridays of a new month. So for every month, it's a monthly economic report from the US economy that shows what job number increase or decrease, just job numbers from the NFP sector of the economy. And the NFP, guys, is what private sectors, of course, with exclusion to farming and government jobs. All right. So on Friday, guys, let's just do this. I so much love this, and guys, I feel very excited sharing it with you. So this is just what we look at for that, right? So I'm just going to show you how we were able to time this entry, this move right here, and how we're able to get this move too, right? That was on Friday, but we're going to do it on from Thursday. Remember, guys, our sentimental bias for the pound USD is already bearish overall, right? And the swing time perspective is bearish. So what we're going to do from Monday to Friday is this. We're actually going to open one position for the swing time on a different account, while on one we'll be scalping and day trading in the direction of the trend. So that's the trick. Okay, now for Thursday, this is what we have. Okay, now we have that from that day. This is on Thursday, right? We're just going to back test for Thursday and Friday. All right, and I'm going to show you right now how we do this with ease, just with the Fibonacci tool and by knowing what the trade sections. So guys, if you've gotten up to this point, guys, really appreciate your input. We would love you to comment down below your own sentimental bias for the pound USD. If not, kindly like the video and subscribe to the channel, right? So you get updated each and every time we share similar trading strategies and first market analysis. Okay, now for that day, okay, we have the Asian section. Like we said and highlighted, that the trading day starts with the Asian section, which runs from 12 a.m. Nigerian time to about 9 a.m. in the morning. Okay, for our brothers who are in India, it's kind of you're 5 hours ahead. So at 12 a.m. here would actually mean that you're at 5 a.m. So at 12 a.m. is 5 a.m. for you, and 9 a.m. should be around when 12 p.m. for you. Okay, and so to speak, 9 a.m. should be around 2 p.m. for you. Okay? So the chart when the chart is 10 a.m. I'm in Nigeria, it's like 2 hours. We're 2 hours behind from what is on the chart, guys. Now the chart here, it's provided by Equity Brokers. That's the broker I use for live trading. So you can as well see similar chart settings and time differences in other from other brokers, though depending on the liquidity providers you use, brokers actually use. Okay, now I'm just gonna use the time difference between the chart and myself here in Nigeria to actually connote this. So if you're watching from India, just know that 8 a.m. the 8 a.m. I say, right, it's like 5 hours. You're 5 hours ahead. So 8 a.m. here would mean 1 p.m. wherever you are, and at 12 a.m. here would mean 5 a.m. wherever you are. Okay, so now the trading strategy properly. Right now we want to analyze today the day, right? Just the daily chart, and from that daily chart we want to get a timely entry, okay, at a particular time. And at a particular time, guys, we'll have two opportunities to actually trade the market. One will be at the opening of the London session, and another trading session will be at the opening of the New York session, or few minutes around that time. So that's what we actually want to do with this strategy. Okay, now just watch what we'll do here. From here now is 12 a.m. 00 on the 4th, on Thursday. Okay, and from there we have this here around 10 a.m. 10 a.m. will be 10 a.m. will be 8 a.m. 10 a.m. here is 8 a.m. This is the beginning of the London session. Okay, and then we have here 15. Okay, 15 here, that's 15:00 will be 1 p.m. and 15:00 here on the chart, it's 1 p.m. here in Nigeria, right? 1 p.m. So in India it should be around 5 or 6 p.m. okay, and then if you're perhaps in New York now should be like okay, that's 8 a.m. UTC, all right, 8 a.m. UTC, so in your own time. Okay, while we're actually having the same difference, same time difference with those who are in London, all right. Now this is the strategy proper. Okay, now use my Fibonacci tool. What I want to get is one, the highest the highest points that the price got to, right, in the Indian section before the opening of what the London session, right, for my first entry. So I want to know where the price opened, which definitely is here, and then the lowest point, the lowest price made in the Tokyo, the Asian session, and the highest point price also made in the Asian session. Then I want to know an exact time. I want to find an exact time, which I already know it's by 10 a.m. chat time, 8 a.m. real time in Nigeria, right? For me to get an entry for, say, a 20-30 pips, price movement. And then I want to know the flow of the market. Now, from here now, I can definitely tell that, hey, this market is, yes, is in a downtrend. But from here, the price actually made what? It actually made some kind of move as though we were going to the upside. So the new day, from what I can see here, is that, see, the price actually came down to this point, definitely coming lower during the Asian session, yeah. And then the price actually made this high before, well, this is the highest point the price made in the Asian session before the opening of the New York session, all right. So I have these 2 points here, and I also have this point to be here, okay, to be here, right? You see what happened here. So I have this point, this is the highest point in the Asian session, and definitely this is the lowest point in the Asian session. And remember, guys, this is one key thing again. Now this is why I put this line from the highest point to the lowest point here. It's very simple, that before the London session opened, right, the price has already broken this low, that's this opening in the New York, in the Asian session rather. So with this now, this structure here being broken could actually signal a possibility of the price actually coming downwards, right? Price actually coming downwards, okay? Now, at the opening of the session, guys, this is what we see here, 8 a.m. And what do you see before this time here? You can see that the price is actually making a move to the upside. And when this happens, guys, if price is actually making a move to the upside, our target here will be what? Either the 50.00, the 61.8, or the 79.00. With the theory to expect that price will actually react at either of these points before it continues in the downtrend. Why? Because this structure here has been broken. You can see the structure broken in that this candle, the candle closed below this support level here. All right, now this is just for a day trading scalping perspective. Okay, now what happened is that the opening of this, guys, you can see profit that could have been made to this point. Now this was on a Thursday, that could have been made to this point. But what we noticed here was that, okay, fine, the price actually came here, went to the upside, and even when it reacted again, it still went upwards. So I would have actually made some profit here, though I didn't trade this day, I traded the next, which is Friday. Okay, I would have actually gotten a profit from this candle, and this candle perhaps maybe entered multiple positions here and gotten some profit off the market using this Fibonacci tool. Now the next time I want to trade, it's when the opening of when the New York session, which will be around here. Now I'll show you how I got this move. I traded this, how I got this move. Now this is it. Okay, so the next time I want to trade, guys, now I come into the market by, let me say, a few minutes, or maybe by 1:30, because this is around 1 p.m. definitely. So maybe by 12:30 or 12, I'm in the market, and I must have seen this huge institutional move to the downside. Now what this means is that, hey, this price actually at this point with a single candle, it broke this structure again. It broke what? It broke the Asian low again, right? And with this now, I'm very much convinced that, hey, this price is actually coming to the downside. But it's not just coming to the downside. Remember, a price gap has already been filled, and by market dynamics, definitely this price gap or price imbalance here has to be filled to at least maybe 50% or 38%. But what I simply do is this, right? What I simply do is this. I take my Fibonacci tool again, and I use my Fibonacci tool from this point here to the lowest point. Now remember guys, this is where I must have seen the market. This is where I must have gotten into the market to start trading. 1 p.m. and before then you can actually have seen this. I've seen this already. I've seen this. Yeah, I've seen this candle. And this candle here is what you see as a hammer, a pin bar, that is showing that hey, it's possible for price to actually go up, right, to the upside. And now using that same timely entry, right, at this point on the 15-minute chart, I can see this move here and I have some take profit levels to use, right? From this point, maybe I see this market making this move. I have a level, a 38.00, which is fine, a 50 fib level, and then a 61.8. That is what I'm actually trading now, is a price retracement, right? For this price to actually be, for this imbalance here to be filled. So I'm just looking for a short-term movement to make some profits off the market and leave. Okay. Now to get precise entries and optimal trade entries, guys, using the Fibonacci tool, right? Scalping, day trading, or whatever you want to call it, but entering the market somewhere around here or here, seeing this, massive rejection on the downside, I'm aiming to take some profit here, take some profit at the 50 fib level, and that will be all. Okay, and then I'm off the market. Now for the next day, which is Friday, this is exactly what the price did, and this is a very cool one. It's just the same thing, guys. Okay, now the market opens here, right, at this point, and what we see here is the market actually coming down first by 4:30 chart time, 2:30 Nigerian time. For those who are in India, definitely 5 hours ahead of the Nigerian time. Okay, now I see this move. This is where I'll be looking to trade first, right? This. And by the time I go to this market here, yes, you're seeing this, but you're at a critical level, all right? So when I come to this market here, I want to see what the highest point that the price has made before it got here, which is here, right? The opening, which is here, okay? So I have this tool again. Have here, this is the highest point. In any direction you actually put it, okay? You put the Fibonacci tool. This is the highest point, and what this is the lowest point. All right, this is the lowest point. Okay, now I'm looking for some scalping opportunities, all right, or day trading, or however you want to look at it. All right, and this is where the candle. So where would my take profit level be? Definitely somewhere around 38.00, which is the highest. 38.00. I'll be looking at here, this candle. I'll be looking at taking some short profits at the 38 level, which is the deepest, right, from the 100 to the 38, with an expectation that okay, this price may actually react from this point, this 38 points, back to the upside or whatever. But then today is a Friday, so our eyes definitely were on the NFP report. All these moves here were as a result of the outcome of the NFP, which indicated some strength in the USD, massive strength in the USD, because the job numbers that was released was very much higher than expected. So that shows the US economy is kind of green right now. Very green. Okay, so from this right here, from this move here, seeing this profit that may have been taken, is just a 1 hour, 1 hour tops, 1 hour, 2 hours holding trade time. So before then you should have taken some profit at either of these levels. Okay, and if you actually check the strategies, forex trading strategies and education playlist, you definitely see how we have been sharing what we have been doing so far with this strategy in that playlist. Okay, now Now this market here made this, you can see this 15 minutes a shooting star candle. So perhaps if you had waited a few minutes, this would have been a confirmation that the market would actually come down a little. And what we see here is what the outcome at the 38 level, which is very fine. Now from this level to this level, perhaps we must have missed this opportunity. And because if we look at this market, you see another move which is very obvious. Okay, now the same thing we talk about breaking the structure and all, we can see that happen here again. We can see that happen here again. Price actually comes down. Price actually comes down and breaks what? It breaks this, the Asian low, the lowest point of the Tokyo section, which is, you see, the price broke and closed below it. So that shows a break of structure too. So definitely from here we can always adjust the price. If you were looking at the market again, but I didn't actually trade this, I traded this. Okay, now from the highest section, the highest point that the price had made to what? The lowest point. Now remember, there's something I talked about, origin of a, like when a structure is broken, definitely it has a price origin, and this happens to be the origin within this time frame. This was the move that actually broke the structure. So if you place your fib level from the top of that move to the bottom before it started showing some maybe signs of rest or corrective move to the upside, you can as well get an entry to maybe either of the most significant Fibonacci levels, which are it could be either the 38.00 like we've explained in the past. That is actually not a deep retracement level, but I do have it there as a reference should in case, and the 50.00, which is the mid level, the 61.8, which is a very good retracement level for price, and then the 79.00 is actually a golden level, right? For most traders who use the Fibonacci tool, the 79.00, it's a very cool deep retracement level. So we want to see price actually make some reactions around there, and as you can see here that after the structure was broken, the same break of structure that we use and we've explained in the past, after the structure was broken, the price actually reacted around where? The price actually came back and reacted around where? Just close to the 50.00 fib level. And at this point, guys, the NFP impact came into the market, and what you see is the result, about 100 pips. But let's say you miss this and we want to trade, like I said, we want to trade where we have time to trade, right? Time to enter the market. And one of the time is when the opening of the London session, or few minutes within that period, and then the opening of the New York session. Okay, 15.00. So you see here at the point where we have this, what do we have here? We have this using our fib level, this here, right, the highest point, and we have this to be the lowest point. We start seeing this move around here, 15.00. As you can see that the market is on a key level somewhere around where the 38.00 and the 50.00, and then we see this same price pattern again, what? A shooting star candle formation. And after then, what followed? A big move. So for these levels here with the Fibonacci tool here, you can see possible take profits area that is very much highlighted here. There's 0.00, the minus 0.27 and minus 0.62, right, fib level, which are possible take profit areas. Definitely you would have gotten this from here, 138 to where? 97, which is around 30 pips to or thereabout, right? Now I put this here because definitely we don't even know how deep this could have gone. It could possibly have stopped anywhere, but these are precise take profit levels for scalping and day trading opportunities. So this is the beautiful part. After this same thing, just like what we highlighted in the beginning, that this same thing, because there's a price imbalance here, you see institutional candles that just form very huge candles, decline candles and all to the downside with so much volatility. Definitely price would want to come in and fill to a reasonable extent, and that's where we still use the Fibonacci level again. And what we see here is very simple, somewhere around here. And the same thing we tend to do. Okay, from the beginning, right, of that downtrend, which is the day, the highest point of the day now to this point. We can as well adjust to where the origin of that move, which is here, and we'll get all significant key levels. Now if we use this, definitely we'll be looking at key levels. So from here, where we start entering the market, maybe around for this candle after this move, we want to see a take profit level 38.00. You can see how well the price reacted here, TP1, and then at TP2 at the 50.0 Fib level, and perhaps 61.8, which you can see here that the price did not get to that point. So from this point and this point, you should have made some profit and closed our positions. Okay, now if we actually use the origin tool, like I have constructed here, the origin of that move, that broke those structures, and using that time frame, or that period in time, to actually stock the market, look for opportunities, we would see price reacting somewhere still around these levels. First take profit 31.80, second take profit 50, third take profit 61.8. So guys, our sentimental analysis, guys, sentimental bias for the pound USD for the coming week is bearish from the fundamental standpoint. However, for this trading opportunity, guys, for this strategy, remember, we won't actually be in the market with you, because we'll be hunting the market at the same time, but it's a strategy that we just employ right now for scalping and day trading. So guys, if you like the idea, don't forget to leave a thumbs up, don't forget to comment. If you want to see more of this, or you need clarity, don't forget to comment your questions. Just leave your questions and comments in the comment box. We'll definitely treat it. If there's need for us to create a content to suit your need or requirement, we will definitely be glad to do so. Millionaire Logistics.